navigating the world of digital assets, especially the ones trying to connect traditional finance and blockchain.
Yeah.
It can feel pretty overwhelming, can't it? So many options.
Oh, absolutely. And it's not just noise, it's complex stuff. You need to understand the tech, sure, but also like, how is it actually being used? What's the regulatory picture? What does it all mean?
Exactly, which is why we're doing this deep dive. You've gathered some really interesting sources, articles, notes, research focusing specifically on the XDC network, comparing it to XRP, and you even found some recent XDC news.
Yeah, and our goal here is pretty clear. Take your material, cut through the clutter, and pull out the key takeaways. We'll look at what these things are, their core tech, how they work.
See where they're getting real-world traction based on your sources.
Right, and what the experts are saying about their prospects. It's really about helping you get up to speed thoroughly based only on the information you've provided.
Think of it as us helping you navigate these specific documents. So let's dive in. First things first, let's just set the scene. What are these two networks, XDC and XRP? Who are they built for?
Okay, so looking at your sources, the XDC network, originally Xinfin, launched 2019. It's described as an enterprise-grade, open-source Layer 1, and critically, it's EVM compatible.
Ethereum virtual machine, right? So developers can use familiar tools.
Exactly, and it's got this hybrid nature, part public, part private. The sources really hammer home its focus.
Yeah.
Tokenizing real-world assets, RWAs, things like that, and financial instruments.
Aiming to shake up trade finance, especially for smaller businesses.
Yeah, precisely. SMEs. And a big theme is compliance. They seem really focused on building in things like ISO 2022 compatibility from the get-go.
Okay, enterprise, RWA, trade finance compliance built in. Got it. What about the XRP ledger?
So XRPL, that's different. Came from Schwartz, McCaleb, Brito originally with Ripple Labs, building the ecosystem around it.
And its purpose?
Right from the start, it was designed for the financial world, specifically as a bridge currency. Think fast, super cheap cross-border payments. RippleNet is their big product suite for that, aimed at banks, payment providers, institutions, basically. Secure, instant, almost free global transactions.
Okay, so it's immediately clear, like you said, two different starting points. XDC targeting that enterprise trade finance or RWO niche with compliance in mind. XRP starting purely with fast institutional payments.
Yep. Different problems, different initial solutions.
Okay, let's unpack this a bit.
Yeah.
How do they actually work? Under the hood, what's the core tech difference according to these sources?
The engine room. Yeah, their underlying tech is pretty distinct, which is interesting given they're both aiming at finance. Let's start with consensus, how they agree on transactions.
Okay.
XDC, the sources say, uses Xinfin Delegated Proof of Stake, XDPOS. Key things highlighted. It's energy efficient, low cost, scalable. And to be a validator, a master node, you need to stake 10 million XDC. Plus, there's a KYC know your customer requirement and a reputation system involved.
KYC. Okay, so you know who the validators are.
Right. And the XDC 2.0 upgrade back in Q4 2024 apparently introduced a Byzantine fault-tolerant protocol called Chained Hot Stuff. Boosts security, speeds up finality.
Gotcha. And XRP, how does it agree on things?
XRP uses the Ripple Protocol Consensus Algorithm, RPCA. Now, this isn't proof of work like Bitcoin or standard proof of stake. It relies on these unique node lists, UNLs.
UNLs, okay.
Yeah, basically lists of trusted validators. They iteratively agree on which transactions are valid. It's fast because it only needs 80% agreement. And like XDC, it's highlighted as being very energy efficient. And here's something the sources kind of point out. These consensus choices match their goals, right? XDC's XDPOS with the KYC and staking seems geared towards maybe enterprise governance or permission setup.
Where identity matters.
Exactly. Whereas XRP's RPCA seems purely optimized for one thing, payment speed and reliability among, probably pre-vetted institutional players using RippleNet.
That makes total sense. One leans towards trusted known entities, the other just raw settlement speed. Okay, what about the actual blockchain structure itself?
So XDC is described as a hybrid layer 1, and like we said, natively EVM compatible, so it speaks Ethereum's language. But the really interesting part your sources mention is support for subnets.
Subnets, like layer 2s.
Effectively, yeah. Layer 2 solutions are sidechains, and they can be customized, maybe permission, maybe even gasless transactions, but they still inherit the security from the main XDC network.
Huh. So tailored environments built right in.
Precisely. Now, the XRP ledger is a decentralized public layer 1. But historically, the mainnet wasn't EVM compatible like XDCs. This is a big area of change right now, according to your sources.
What's happening?
They're building an XRPL EVM sidechain. It's in development, expected mainnet launch Q2 2025. Uses tech like Cosmos SDK, EVMOS. The goal...
That is a separate sidechain.
Exactly. And this difference in approach is quite fascinating, something the sources seem to highlight. XDC builds hybridity and EVM right into its layer 1, offering these subnets. XRP keeps its core L1 lean and focused, adding EVM capabilities via a distinct sidechain.
Which could appeal differently to developers or businesses, I guess. Like, do you want it all integrated or keep the core separate?
That seems to be the implication. Different architectural choices potentially leading to different adoption paths.
Right. And speaking of developers, smart contracts, how do they stack up there?
Well, on XDC, it's pretty simple because of that native EVM compatibility. If you know Solidity, the main Ethereum language, you can build on XDC. Relatively low barrier to entry for a huge pool of developers.
Makes sense. What about XRP? Obviously, the new sidechain helps.
Big time. That EVM sidechain is set to bring full decentralized application, or DApp, support, but that's not all. They're also adding features directly to the main layer 1. The sources mention hooks. Yeah, lightweight bits of code using WebAssembly. They kind of attach to existing transaction types to add custom logic. And they also talk about extensions, which let you attach code to existing L1 features. The example given is Smart Escrows, planned for Q3 2025, with a DevNet hopefully Q4 2025. So putting it together, XDC offers that direct, familiar EVM path on its L1. XRP is creating multiple ways to do smart contracts. Lightweight stuff on L1 with hooks and extensions, and full-blown dApps on the upcoming L2 sidechain. It feels like XRP is broadening its toolkit beyond just payments.
Very interesting. Okay, security. Hugely important, especially for finance. What do the sources say about their security models?
For XDC, we touched on the masternode requirements, the stake, the KYC, penalties for misbehavior. That XDC 2.0 upgrade also added something called forensics monitoring. Plus, its enterprise angle means built-in compliance features like AML, APTF tools, sanction screening, KYC integration, audits mentioned from firms like Safer and Certic. It definitely reads like an enterprise-grade focus.
Okay, vetted participants, compliance-focused.xrp.
XRP leans heavily on its consensus algorithm, RPCA, for fault tolerance. It's designed to keep working even if up to 20% of validators are offline or faulty. It also has built-in stuff like invariant checking and anti-spam measures.
Like the account reserves. Need XRP to even open an account.
Exactly. 10 XRP base reserve, 2 XRP per item you add, like a trust line or an open order, plus those tiny transaction fees around 0.000001 XRP get burned. That helps prevent spam too. The core server software, Rippled, has been around a long time, lots of audits, and new things like the EVM sidechain and the multi-purpose token standard are also getting audited.
Was there something about a vulnerability?
Yes. The sources mention one found and fixed in April 2025. But it was important to note it was in the xrpl.js library, basically a tool developers use, not the core XRPL protocol itself. That was patched quickly.
Okay, so a dev tool issue, not the main network.
Right. So overall, both are clearly serious about security, but different flavors. XDC integrates vetting and compliance tools for its niche. XRP relies on its core consensus design, its long track record, and audits for new components.
Okay, we've peeked under the hood. Performance time, how fast, how cheap. Can they handle the volume? What do the sources say?
Right, the metrics. And honestly, for the financial use cases they're targeting, both look pretty impressive compared to old systems. Your sources put XDC post 2.0 upgrade at over 2,000 transactions per second, TPS. Finality, when a transaction is truly irreversible, around 6 seconds.
12 plus TPS, 6 seconds.
Yeah.
Okay, XRP.
XRP is cited around 1,500 TPS typically, though there are claims it can go higher, maybe up to 3,400 TPS, and its finality is even quicker, 3 to 5 seconds.
Wow, okay. Both are incredibly fast then.
Seriously fast.
Yeah.
And the costs, also incredibly low for both. XDC transactions are quoted around, what, 0.00000001, down to maybe 0.000000646, plus the potential for gasless transactions on those subnets we talked about.
Fractions of a penny. Amazing.
Yeah. XRP is also extremely cheap, around 0.00002 per transaction. So cost-wise, both are revolutionary compared to traditional finance rails.
Absolutely. And handling scale, capacity.
Well, XDC relies on its XDPOS consensus and gets extra scalability and flexibility from those layer 2 subnets. XRP has its proven layer 1, which has processed billions of transactions over, more than a decade. And that upcoming EVM sidechain is specifically designed to add horizontal scale for smart contracts and dApps, taking load off the main ledger. So the takeaway on performance from your sources seems to be both offer the high speed and low cost needed for finance. The real difference might be how they scale. XDC integrates scaling via its hybrid L1 and subnets. XRP scales by keeping its L1 focused and adding capacity with a separate sidechain.
Got it. Different scaling philosophies. Okay, tech is great, but where's the rubber hitting the road? What are they actually doing? Real-world use cases and adoption.
This is where you see their strategies play out. For XDC Network, the sources really emphasize trade finance, digitizing documents, making processes more efficient, helping SMEs get capital, and that ties into RWA tokenization.
Right, making things like invoices or private credit tradable on-chain.
Exactly. Or even tokenized U.S. Treasuries. The sources mention USTY from Securitize being issued on XDC. That makes these assets more liquid. And that ISO 2022 alignment is key for getting banks and institutions comfortable.
And that Bitso partnership news you found, that seems like a perfect example, right? U.S. Mexico remittances.
Absolutely. That May 2025 news recap you provided highlights it. Bitso, huge player in Latin America, using XDC for cheap, fast cross-border payments. That's one of the biggest remittance corridors globally. Your sources quote $63 billion going in, over $70 billion out. And it explicitly mentions leveraging XDC's ISO 2022 standard. That's a major real-world win.
Definitely a concrete example. Any other XDC partnerships mentioned?
Yeah, the sources list being the first blockchain member of the Trade Finance Distribution Initiative, TFDI, working with banks there, involvement with the ITFA's D&I initiative, collaborating with Singapore's government tech agency, IMDA, on Trade Trust, and working with SBI Group for expansion in Asia Pacific. That May 2025 recap also mentioned institutional infrastructure progress, like Utila offering wallets handling $8 billion monthly volume, and RWA momentum with Libre planning tokenized funds.
Okay, so XDC is really embedding itself in that trade finance or RWA world, focusing on compliance and specific industry partnerships. How does XRP's adoption picture look in the sources?
Well, XRP Ledger's historical strength is obviously cross-border payments using RippleNet's on-demand liquidity, or ODL. Using XRP as that bridge asset, it's also used generally for providing liquidity in the market.
But it's expanding beyond just that now.
Very much so, according to your sources. It's moving into broader banking services, other types of remittances, even micropayments, and it's making a big push into DeFi. They already have automated market makers, AMMs, on the ledger, and there's a native lending protocol planned for Q3 2025.
And RWAs too, like XDC.
Yes. RWA tokenization is a big focus for XRP now as well. The sources mention exploration by the Dubai Land Department for real estate, and this new multi-purpose token standard, MPT, that's designed for tokenizing things like bonds or structured products. Plus, the XRPL is being looked at for CBDCs, and it's supporting stablecoins. Now, Ripple has its own RLUSD, and that EURLP stablecoin, which is MiCA compliant in Europe, launched in May 2025.
So it sounds like both are targeting RWAs and institutions, but maybe from different angles.
That's the picture the sources paint. XDC seems deeply focused on the specifics of trade finance, using compliance as a key differentiator. XRP is leveraging its strong payment foundation and new tech, like the EVM sidechain, to expand much more broadly across DeFi and various RWA types. Recent XRP partnerships mentioned include Tranglo, BDACS in South Korea for custody, ongoing stuff with SBI Ripple Asia, and HashiDX in Japan, and DZ Bank in Germany for custody.
Different strategies for that same lucrative RWA space. Fascinating. Okay, let's talk about the actual tokens, XDC and XRP. What do the sources tell us about their tokenomics, the economics behind the tokens and the general market outlook?
Okay, tokenomics. For XDC, the sources cite a total supply around 37.7 to 37.99 billion tokens. Circulating supply in early mid-2025 was around 14.9 to 16.2 billion.
Okay.
The initial tokens went to founders, the ecosystem fund, things like that. The main incentive now is staking rewards for those masternodes. Validators get around 10% APY, standby nodes about 8%. But a key thing with the XDC 2.0 upgrade was introducing token burning.
Burning tokens to reduce supply.
Yeah, periodically burning some tokens. The idea is to counter the inflation from the staking rewards, aiming for a more sustainable model over time. The net effect, of course, depends on how much gets burned versus how much is issued. The token itself, XDC, is used for gas fees, for staking that 10 million for a masternode, and for settlement.
Right, and XRP's tokenomics.
XRP is simpler in some ways. Fixed total supply, 100 billion, all created at the start, pre-mined. Circulating supply, late 2024, early 2025, was around 57 to 59 billion.
And how are those distributed?
Mostly to the founders and to Ripple Inc. itself. A key difference from XDC, the XRP ledger protocol doesn't create new XRP to reward validators. Its deflationary aspect comes purely from the transaction fees being burned.
So every transaction destroys a tiny bit of XRP.
Exactly. That 0.0000001 XRP fee is gone forever. Ripple holds a lot of XRP in escrow and releases some monthly, which increases the circulating supply, but doesn't change the total supply of 100 billion. XRP's utility is paying those burn fees, funding the account reserves for anti-spam, being the bridge asset in ODL, and potentially being used as collateral in DeFi applications. So an interesting contrast the sources highlight, XRP has this built-in automatic deflation via fee burning. XDC is adding burning mechanisms in V2.0 to actively manage the inflation from its staking rewards. Investors often like deflationary assets, but the sources imply that ultimately, demand driven by utility is what matters most for both.
Makes sense. Utility drives demand. How do they stack up in the market right now based on that late May 2025 data you had?
Well, the scale difference is huge. XRP is a much bigger player. Market cap around $135–140 billion. Daily trading volume $1.96–2.14 billion. It's widely known. Ranked #4 by popularity on Coinbase in one source.
What XDC?
Much smaller. Market cap around $1.07–1.1 billion. Daily volume quite a bit lower, $23–48 million range. Price-wise, the sources had XDC around 007, says 720.075, and XRP much higher at $2.30, $2.35. Their all-time highs were 0.1939 for XDC and $3.84 for XRP.
Big difference in current market size and recognition. Now, the regulatory aspect, that seems massive, especially for XRP.
Absolutely crucial, and the sources spend time on it. XDC's approach is described as proactive compliance, highlighting its ISO 2022 work, MLETR alignment, the built-in KYTML stuff. Its focus on regulated industries, joining groups like TFDI, working with Singapore's IMDA, joining the MICA Alliance in the start.
Seems like it. XRP's story, on the other hand, is dominated by that SEC lawsuit in the U.S. The source is laid out neutrally. Filed due in 2020, SEC alleges illegal security sales. They mentioned the big ruling from Judge Torres in July 2023 saying programmatic sales on exchanges weren't securities, but direct institutional sales were.
Right, that was a split decision. Yeah. Exactly. There was a partial settlement mentioned, around $50 million fine in 2024. But as of May 2025, the sources say Ripple and the SEC were still stuck on the penalties for those institutional sales. And the possibility of an SEC appeal hangs over it. This creates major ongoing uncertainty for XRP, especially in the U.S. market.
But it's doing better elsewhere, regulatory-wise.
That's what the sources suggest. More clarity in Europe under the new MICA rules. They mention the LCX white paper approval for XRP, that URP stablecoin launching, and positive signs in parts of Asia, like Japan and South Korea. So it's fascinating, right? XDC trying to build compliance into its niche. XRP fighting a major battle in the US while finding clearer paths in other big markets. Their regulatory journeys couldn't be more different and really shape their current standing.
That SEC cloud over XRP is definitely a huge factor. What about expert opinions, price predictions? Your sources mentioned some.
They did, yeah. And it's always worth saying this is not financial advice, just reporting what the sources contain. For XDC, that Changelly article had some, frankly, wildly bullish long-term numbers.
Look how bullish.
Well, for 2025, average prediction around Deers Biz of Sarah's 746, maybe 26% up, but then they jump. 2030 average near $0.53, over 900% gain. 2040 average, $37.59, that's like 70,000% up. And 2050 average over $52, almost 100,000% ROI. Changelly calls the forecast quite positive, suggests a bull trend might be coming, but again, big disclaimers.
Okay, those are some massive long-term projections. Any other XDC views?
The other comparison source had a mix. Some analysts like eGreg Crypto were bullish, seeing $1–3 based on tech and RWA focus. NewsBTC saw an uptrend. Others, like CCN, were more cautious short-term. Token Metrics gave lower scenario-based ranges. So a variety of views, but generally positive leaning for XDC's potential.
And for XRP, same kind of mix.
Pretty much. Bullish takes included predictions like $12 based on fundamentals, RWA potential, maybe ETFs. Markets.com had a $5–10 case, but depended on a good SEC outcome and ODL growth. On the cautious side, some focused on technical price levels, and outlets like Motley Fool and NASDAQ expressed skepticism about XRP beating Bitcoin or Ethereum long-term, even if the SEC case resolves favorably, citing tech limitations and the regulatory risk it faced, though they acknowledge catalysts like an ETF or IPO exist. So the big picture from these predictions: massive range, lots of speculation. Forecasts clearly hinge heavily on specific events. The SEC outcome for XRP is the glaring one, and the pace of actual adoption for both. And of course, depends entirely on who you ask and how they analyze it.
Right, so boiling it down for you, the listener, the growth potential and risks summarized from that table in your sources.
Okay, for XDC, growth potential linked to RWA trade finance, market growth, its hybrid tech, low fees, that compliance angle, risks. Enterprise adoption might be slow, there's competition, its market liquidity is lower than the giants, and maybe some see the masternode model as a centralization concern despite the KYC.
And XRP.
Growth potential heavily tied to a good SEC outcome, more ODL institutional use, maybe an ETF or IPO, and success with the new EVM sidechain broadening its use cases. Risks. The SEC lawsuit outcome is number one, obviously. General regulatory uncertainty, those persistent centralization concerns about Ripple's holdings, competition in payments, and price swings affecting its use as a bridge. So what does it all mean for you? The sources really emphasize there's no single better investment here. It depends entirely on your goals, your risk tolerance, what you value. Do you prefer XDC's focused, compliance-driven niche, or XRP's established payment network that's expanding aggressively but carries major legal baggage?
It sounds like diversification might be a common theme for people interested in this space.
That's often mentioned, yeah, reflecting the fact that neither outcome is guaranteed.
Okay. Well, we've certainly done a deep dive into XDC and XRP, comparing their tech, adoption, tokens, and outlook, all based directly on the materials you gathered.
And I think what stands out is this picture of two projects, both aiming for a big slice of the future of finance, especially RWAs and institutional stuff, but coming at it so differently. XDC is burrowing into its trade finance niche, using compliance almost as a shield.
While XRP leverages its payment network power to expand everywhere DeFi, RWA's using new tech, but constantly looking over its shoulder at the SEC.
Exactly. It's complex stuff, and hopefully digging into the sources like this helps you get a clearer picture.
Being well-informed is definitely the name of the game here.
Absolutely. We've distilled the info from your sources, but like those sources say, none of this is financial advice. This market's volatile. Understanding the tech choices, the adoption strategies, the regulatory landscape, it's all critical.
We definitely encourage you to keep exploring based on what caught your interest during this discussion.
Yeah, and maybe chew on this thought, building on what we discussed. We see both XDC and XRP pushing hard into RWAs and institutional DeFi, right? But they have these fundamentally different architectures. XDC's integrated L1 EVM subnets versus XRP's core L1 plus the separate EVM sidechain, hooks, extensions, and totally different regulatory experiences. How might those deep-seated differences shape who wins out or how they coexist in that overlapping future market? Something to think about.